Welcome to Chill Chaz Weekly Tariff Tactics. Today, we're breaking down one of the biggest shakeups in U.S. trade history. When the Trump administration started using tariffs not just as a policy tool, but as a central part of foreign and domestic strategy. For decades, U.S. trade policy leaned heavily toward free markets and global cooperation. Presidents from both parties mostly supported lowering trade barriers. But with Trump, that script flipped hard. Suddenly, tariffs were being used as the go-to solution, for everything from economic issues to immigration. In this episode, we'll break down the legal tools Trump used, why he said they were necessary, and what actually happened. We'll look at how these policies disrupted global supply chains, rocked markets, and reshaped international relations. Let's talk about the laws first. Trump didn't invent new powers. He dug up old ones and stretched them farther than anyone had before. There were four main tools: Section 201, Section 232, Section 301, and the big wild card, IEPA, the International Emergency Economic Powers Act. Each of these gave him a way to hit imports with tariffs, but they all had different rules and limits. IEPA, in particular, let him act quickly and broadly. Section 201 is all about protecting U.S. industries from being overwhelmed by a flood of imports. In 2018, Trump used it to place tariffs on washing machines and solar panels. It hadn't been used in over a decade. He brought it back with a bang. Section 232 allows for tariffs if imports threaten national security. Trump claimed that steel and aluminum imports did exactly that, even from friendly countries like Canada and the EU. By 2025, he canceled all exemptions and doubled down with even more restrictions. Section 301 was the go-to tool for hitting back at China. The U.S. said China was stealing intellectual property, forcing U.S. companies to share tech, and manipulating the rules. So the administration dropped tariffs on over $360 billion worth of Chinese imports in multiple waves. Then there's IEPA, the biggest game changer. With it, Trump didn't need an investigation or a ruling. He just declared a national emergency, and boom, new tariffs. He said emergencies like illegal drug imports and immigration issues justified broad economic actions. Using IEPA, he slapped a 10% tax on most imports, plus much higher tariffs on countries like China, some going up to 145%. It was bold, it was fast, and it had never been done before like this. So why take this approach? Trump said it was about putting America first. He promised these tariffs would bring back manufacturing jobs, punish unfair trading partners, and make the U.S. less dependent on foreign countries. But the tariffs weren't just used for trade. They became tools for immigration policy, drug enforcement, and even negotiating with other countries on unrelated issues. Trade policy was suddenly doing the work of diplomacy, defense, and law enforcement. This made everything more unpredictable. One day, Canada would be hit with a 25% tariff. The next day, they'd be excluded. China's tariff rates would spike overnight. Businesses couldn't plan, and that chaos affected the whole economy. Companies didn't know how to price goods. Stock markets reacted violently, and supply chains, the systems that bring parts and products from one country to another, were thrown into disarray. Some companies moved operations, but not always to the U.S. Economists were split. Some believed the pressure might force countries to play fair. Others warned that the tariffs were more damaging than helpful, Either way, they agreed that the uncertainty made things worse. What actually happened? Prices for goods went up. Growth slowed. Investments were delayed or canceled. Some U.S. factories reopened, but others struggled because the parts they needed now cost more. Meanwhile, the administration pointed to the billions in new revenue from the tariffs as a win, but most of that money came from American companies and consumers paying more for goods. It wasn't free money, well, it was a tax. It's like charging yourself extra for groceries and calling it a victory. Economists said any revenue gains were wiped out by the broader damage to the economy. Then came the lawsuits. Critics said the president was abusing emergency powers. Congress pushed back. The World Trade Organization got involved. Legal fights broke out over whether this kind of use of IEEPA was even allowed. So, what does this all mean? Trump's tariff policy wasn't just about protecting industries. It was a massive shift in how the U.S. uses trade tools. It showed how one person with executive power could drastically change global trade with just a few announcements. Every tariff tweet, pause, and policy flip sent the markets into convulsions. In early April 2025, China hits back. S&P drops 6%. Dow dives over 2,200 points. A week later, Trump pauses tariffs for most partners, but hikes them on China. And boom, the S&P rockets up 9.5%. That's not a bull market. That's a panic attack in a suit. These weren't isolated moves. Academic studies show a pattern. Tariff announcements tanked stock prices, but even temporary good news triggered massive rallies. Investors weren't just reacting to tariffs, they were reacting to the sheer unpredictability. The April 9th rally was historic. The S&P had its best day since World War II. But even then, the index didn't recover all the ground lost the week before. Why? Because the pause excluded China and only lasted 90 days. The market knew the chaos was far from over. Now, let's talk options. Minutes before Trump's tariff pause post, someone placed multi-million-dollar bets on the S&P going up. Those trades made tens of millions. Instantly, lawmakers cried foul, calling for insider trading investigations. Trump had posted great time to buy earlier that day. Coincidence? Maybe. Convenient? Definitely. No solid proof ever surfaced. But the timing, the profits, and the stakes turned a market move into a political scandal. When policy swings create profits for a few and pain for the rest, people start asking questions. Meanwhile, the sectors weren't all hit the same. Tech was exposed due to global supply chains. Phone prices spiked. Apple scrambled to ship inventory before new tariffs hit. But then, surprise, exemptions arrived. Phones, chips, servers spared temporarily. Agriculture got hammered. China hit back with tariffs on soybeans, pork, corn, you name it. Exports cratered. Midwest farmers got bailed out with billions, but the market share, that went to Brazil. Manufacturing was stuck in the middle. Steelmakers celebrated, but downstream industries, from cars to cans, faced rising costs. For every job saved in steel, dozens were lost in sectors that use steel. The policy picked winners. Most weren't us. And still, prices kept rising. A Yale study said the average household lost over $3,800 in buying power. Lower income families got hit hardest. Basic goods like clothes and phones cost more. That's not just inflation, that's a tariff tax. tax, GDP took a hit. Every major economic study agreed. The tariffs slowed growth. Some pegged the loss at 0.5% of GDP, others higher. The jobs didn't come back. The factories didn't reopen. But the prices, they stayed up. And about that trade deficit, still there. Tariffs on China didn't shrink it. They just shifted imports to Vietnam, Mexico, and others. The global supply chain rerouted. The deficit barely budged. Retaliation made it worse. China, Canada, Europe, they hit back with tariffs on American goods. Spirits, machinery, peanut butter, you name it. Exports dropped. Producers suffered. No silver lining. Investors panicked. The VIX, Wall Street's fear gauge, spiked to 60 before the April pause. Then it crashed the next day, the biggest single-day drop in history. Markets were desperate for stability, but policy kept changing like the weather. Confidence cratered. Businesses froze investments. Families held back on spending. When CEOs can't plan a quarter ahead, the economy stalls. Capital fled to safety. Treasury bonds surged. Safe haven currencies like the dollar strengthened. Risk premiums rose. This wasn't just tariffs. It was systemic uncertainty. In the end, the tariff chaos rattled the markets, raised prices, shrank exports, and slowed growth. It helped a few sectors, but hurt most. And the instability, that was the most damaging policy of all. That's the economic aftermath of the trade war. We're exposing the mechanics behind how power moves money in silence. Did someone cash in on a whisper of policy before it hit the headlines? Was it criminal or just the norm? Flashback to April 2025. A tweet hits, "Great time to buy DJT." Hours later, tariffs are paused. DJT stock explodes. Coincidence? Please. If that doesn't feel staged, check your pulse, because that looked more like a signal than a statement. Insider trading laws, strong in theory, weak in Congress. If you're the one making the rules, you're also holding the playbook. Proving a case means showing access, intent, and breach. That's a steep climb, especially when the trail vanishes behind privilege and vague ethics. We've seen bold options trades land minutes before announcements. Perfect timing. But unless there's a confession, nothing sticks. The Stock Act? Symbolic. Over a decade old. No convictions. Just late filings and minor fines. Transparency without teeth. The public sees what looks like insider play. Stocks rise for lawmakers right after private briefings, and all we hear is silence. I'm walking through a tent city right now. People are bartering blankets while the powerful bet on policy shifts. That contrast, that's the scandal. This isn't isolated. It's a pattern, a culture of quiet enrichment, and the law is written to look busy without doing much. Not every lawmaker is gaming the system, but enough are, and the rules too soft to stop them. So what now? If the only way to get caught is to admit it on camera, then what's the real deterrent? We're left watching a wealth move in real time, while justice stays on pause. The scoreboard's rigged, and it's not subtle. If this series made you question anything, good. That means you're paying attention. In a system built on trust, even the illusion of corruption breaks it. Stay skeptical, stay alert, watch the trades, and follow the timing. This is Chill Chaz, signing off.